Listen up because we're about to dive into the wild world of investing, where fortunes are made and lost every single day. We're talking about a topic that's near and dear to my heart: managing risk. You see those flashing red numbers on the screen? They're not just numbers, people. They represent real companies, real dreams, and real money on the line. Investing in falling stocks can feel like trying to catch a falling knife. It's tempting to think you can time the bottom and make a killing, but trust me, it's more likely to end with you getting burned. That's why it's absolutely critical, and I mean mission critical, to understand the risks involved and, more importantly, how to mitigate them. We're gonna break it down, step by step, so you can protect your hard-earned capital and come out swinging. Before you even think about hitting that buy button, you need to do your homework. And I'm not talking about skimming a few headlines or listening to your brother-in-law's hot stock tip. I'm talking about deep, thorough research into the company's fundamentals. What are their revenues? What's their earnings growth like? Do they have a rock-solid balance sheet, or are they drowning in debt? Understand the company's competitive landscape. Who are their rivals? Are they a leader in their industry, or are they constantly playing catch-up? Remember, investing without research is like playing darts with a blindfold on. You might get lucky once in a while, but eventually you're going to hit a wall. Listen, diversification is not just a fancy Wall Street term, it's your first line of defense against a market meltdown. Think of it like this: you wouldn't bet your entire life savings on a single hand of poker, would you? The same principle applies to investing. Don't put all your money into one stock, no matter how promising it seems. Spread your investments across different sectors: tech, healthcare, energy, consumer goods, you name it. By diversifying, you're essentially creating a safety net. If one sector takes a hit, the others can help cushion the blow. Remember, a well-diversified portfolio is like a good basketball team. You need a strong starting five to win the championship. Chapter 3: Stop Losses, Your Emergency Brake. Even the best investors in the world make losing trades. It's part of the game. But here's the thing: the pros know how to limit their losses. And that's where stop-loss orders come in. Think of a stop-loss order as your emergency brake. You set a specific price at which you're willing to sell a stock if it starts to go against you. This way, you're automatically protected from a major downfall. Now don't get me wrong, stop-loss orders are not a magic bullet. They won't make you rich overnight, but they can be an incredibly valuable tool for managing your risk and protecting your capital. Chapter 4: Stay informed. Knowledge is power. The market is a dynamic, ever-changing beast. What worked yesterday might not work tomorrow. That's why it's absolutely crucial to stay informed about market news and trends. Read financial news websites, follow reputable analysts on social media, and listen to podcasts. The more knowledge you have, the better equipped you'll be to make informed investment decisions. Remember, in the world of investing, the early bird gets the worm, but the informed bird avoids getting eaten by the cat. So keep your eyes peeled, your ears open, and never stop learning. Outro now, go make some money. There you have it, folks. Now you're armed with the knowledge you need to navigate the exciting and sometimes treacherous waters of the stock market. Remember, investing is a marathon, not a sprint. There will be ups and downs along the way, but by following these tips and staying disciplined, you can weather the storms and come out ahead in the long run. And hey, if you have any specific stocks in mind or need further advice, feel free to ask. I'm always here to help my fellow investors succeed. Now go out there and make some money.